जय श्री श्याम, जय महाकाल. Good evening, everybody. Welcome back to my channel, Accounts for Beginners. Today, we will discuss profit and loss on disposal of fixed assets. What do you mean by it? इसका मतलब ये है कि आप कोई भी एसेट्स को बेचते हैं तो उसमें उसका जो स्क्रैप वैल्यू आपको मिलता है, तो आपका डेप्रिसिएशन होने के बाद जो WDV है आपके पास, तो वो स्क्रैप वैल्यू उस WDV से ज़्यादा है तो आपको प्रॉफिट होगा, और अगर स्क्रैप वैल्यू या डिस्पोजेबल वैल्यू WDV से कम है तो आपको लॉस होगा. Owing to technological development, a depreciated asset becomes obsolete and it may be sold out before its useful life. कोई भी टेक्नोलॉजी डेवलपमेंट के कारण कोई भी एसेट ऑब्सोलीट हो सकता है और वो अपना जो लाइफ है, यूजफुल लाइफ, उसके पहले भी उसका वैल्यू खत्म हो जाएगा. मीन्स वो बेकार हो सकता है क्योंकि टेक्नोलॉजी डेवलप हो गया है. अगर आज उस एसेट्स को आप यूज़ करते हैं तो यू विल इनकर हायर कॉस्ट और यू मे नॉट compete in the market using that technology. So in that case, you have to dispose of the asset before completion of its useful life. The business enterprise may also sell an asset which is no longer required. सपोजिंग आपने कोई एसेट लिया है और आज आपको उसका ज़रूरत नहीं है तो भी आप उसको बेच सकते हैं. इट इज़ क्वाइट कॉमन दैट सेल वैल्यू ऑफ सच एसेट्स मे नॉट बी इक्वल टू इट्स रिटन डाउन वैल्यू. ये जनरल सा बात है कि जिस दाम में आप बेचेंगे इस एसेट्स को, ज़रूरी नहीं है कि वो एसेट आपके WDV के साथ मैच करे. समझे? रिटर्न डाउन वैल्यू जो आपके बुक्स में है उसके एट पार वैल्यू में बाजार में बिक जाए, दैट इज नेक्स्ट टू इम्पॉसिबल. सो इफ एसेट्स is sold at a price which is more than its WDV, it produces profit. And on the contrary, when the asset is sold at a price which is less than its written down value, in this case, it is loss on sale of assets. Are we clear? AS 10 states that the gain or loss arising from derecognition of an item of a property, plant and equipment should include in the statement of profit and loss when the item is derecognized. जब AS 10 क्या बोलता है, जो भी प्रॉफिट और लॉस होता है एसेट्स बेचने से या उसको एसेट कैटेगरी से हटा देने से, वो प्रॉफिट या लॉस को अपने को प्रॉफिट एंड लॉस अकाउंट में ट्रांसफर करना है, ना कि उसका ट्रीटमेंट हमको एसेट्स अकाउंट में करना है. उसका एसेट अकाउंट में सिर्फ एक ही ट्रीटमेंट होगा, उसका WDV को हम लोग वहाँ से हटा के एक अलग एसेट डिस्पोजेबल अकाउंट में ट्रांसफ़र कर देंगे और वहाँ पे हम लोग उसका प्रॉफिट एंड लॉस जो बनेगा उसका ट्रीटमेंट करके अकॉर्डिंगली दैट विल बी ट्रांसफर टू द प्रॉफिट और लॉस अकाउंट. The gain or loss arising from the depreciation of an item of property, plant and equipment should be determined as the difference between the net disposable proceeds, if any, and the carrying amount of the item. Okay? Now let's go through the journal entries. Journal entries when no provision for depreciation account is maintained. ठीक है? There are 4 journal entries that should be taken into consideration. Assets disposable account to assets, as discussed just few minutes ago. Depreciation account to asset disposable account. Now, why you require this journal entry? This journal entry is basically posted for the duration. Depreciation is charged for the duration of usage of assets during a financial year. Supposing you are disposing of the asset in the end of the financial year, so the whole of the depreciation is to be deducted from the asset value. Only then we should derive at the profit or loss. And if you have used it for 6 months, accordingly 6 months depreciation is to be deducted, and only then you can arrive at the exact profit and loss of that asset. Bank account to asset disposable account, because the asset value is placed in the asset disposable account. Now we should check whether it's a profit or a loss, and accordingly we should transfer it. If it is a profit, it's asset disposable account to profit and loss account, and if it is a loss, it is profit and loss account debit to asset disposable account. Are we clear? Asset disposable account is to be treated as a asset account, that is so we are removing that particular asset from the assets, whole cluster of assets, and transferring it to the asset disposable account. Over there we gave the treatment for depreciation, for the receipts that we have received on selling out that asset, and then we derive at the profit or loss generated from the disposal or derecognition of that particular asset. Right? Now let's go through an example. Mr. Ved of India purchased the required machine on 1/4/2020 for rupees 65,000. He engaged X to erect the units, who charged rupees 5,000 and agreed to wait for his payment. Fine. The machinery was depreciated at 10% per annum on fixed installment without installment method, and the accounting year being April to March. So April to March is the accounting year, and the depreciation format is fixed depreciation installment, that is straight line method. On 1/10/2022, a single unit which cost 10,000 rupees originally was sold for a cash price of rupees 7,000. On the same date, a new machinery costing 10,000 paid by check was installed. Write the machinery account for the year 2021, 21-22 and 22-23 and machinery disposable account. Clear? Are you clear with the question? Let's move to the answer. They only just require two accounts, that is machinery account and machine disposable account. So let's proceed with it. Now machinery account. It is said that he had purchased it for rupees 65,000. So what is the journal entry? Machine account debit to bank. So over here it comes to bank 65,000 1/4/2020. Clear? Secondly, it is stated that X, a contractor, erected the machine for 5,000 and he agreed to wait for his payment. Means he has done the job on credit. So what is the journal entry for credit? Machine account debit, because debit what comes in, and he is the giver, credit the giver. So who is the giver? Mr. X. So to Mr. X. So to X account credit 1/4/2020 5,000 rupees. So the total value of the machine is 70,000. Now it is said that the depreciation will be charged at the rate of 10% on fixed depreciation method, that is a sum of rupees A sum of rupees 7,000 is to be deducted on a regular basis till the value becomes 0, because it's a fixed sum of depreciation and for the whole life. So what will be the journal entry over here? As we are not having accumulated depreciation account, so the depreciation is posted over here itself. So it comes to by depreciation. The journal entry is depreciation account debit to machinery, because debit all expenses and losses, and depreciation is an expense to the company. So depreciation account debit to machinery account. So over here it is by depreciation 7,000, and we are closing the balances, and it comes to by balance carry down 63,000. We have closed the books, and on 1/4/2021 the balances are brought down. To balance brought down 63,000. That is the written down value of the machine as on 1/4/2021. Now, when did we sell the machine? It is stated that on 1/10/2022. So 2021-22 no sales. So simple depreciation, and then the balance 56,000 is transferred to 1/4/2022. So on 1/4/2022 we have got the brought down value as 56,000. Now on 1/10/2022 the machine was disposed for rupees 7,000, correct? So what was the original value of the machine? 10,000, and we are to charge a depreciation of rupees at 10% on a fixed basis, that is 1,000 each year. So how many years have been passed by? 2 years. So we are, from the 10,000 we will deduct 2,000, and the remaining value, that is the WDV of that particular machine as on 1/4/2022, correct? So that WDV is to be transferred to the machine disposable account. So what will be the account? Machine disposable account to machine. We are reducing it. We are reducing the machine value. ठीक है? Debit what goes out, credit what goes out. So what is going out? Machine. And where it is going? It is going to the machine disposable account. So in the machine disposable account, it is to machinery account 8,000 rupees. Are we clear? Great. Next, on 1/10/2022, first let's complete the machinery disposable account, and then we can discuss the second additional machine. So machine disposable account, we have brought for transferred rupees 8,000 via machine, and what did we receive? 7,000 rupees. So what is the journal entry for it? Debit what comes in? What is coming in? Cash is coming in. So cash account debit to machine disposable account. Credit what goes out? ठीक है? So what is going out? Machine is going out. So we are crediting the machine and debiting cash. So here by cash account 7,000, and as discussed that we have already used the machine for a period of 6 months. So we will be posting the depreciation for 6 months. So by depreciation 500. Why 500? Because equal installment of 1,000 each year. So in this year we have used the machine for 6 months. So 50% of that is to be considered as depreciation. So 500 as depreciation, and what is the balance? Is 500. So we have incurred a loss of 500 by selling the machine. Are we clear? Now we had purchased one more machine for rupees 10,000. So machine account debit to bank, that is the journal entry, and over here in the machinery account ledger you will find it is written as to bank 10,000 rupees. And next is the depreciation account. So depreciation, the balance machine, how much is the depreciation left? 9,000. 7,000 minus 1,000, that is 6,000 rupees for the old plant and 500 rupees for the new plant, because 10,000 into 10%, that is 1,000. For 6 months it is 500. So 6,000 plus 500 is 6,500. Now we will take the balance as 51,500 to be carried forward. Are we clear with this? Now let's move forward to a different question. Example. Biswas Pharmacy has imported a machine on 1st July 2020 for rupees 1,60,000. He paid customs duty and freight of rupees 80,000 and incurred erection charges of rupees 60,000. Another local machine was purchased on 1st Jan 2021 for rupees 1 lakh. On July 2022, a portion of the imported machine valued one third got out of order and was sold for 34,800. Are we clear? Next, another machine was purchased for rupees 50,000 on the same date. Which date? On 1st July 2022. The depreciation is to be calculated on 20% per annum on straight line method. Straight line method is fixed depreciation method. So show machine account for 2020, 2021 and 2022, assuming calendar year to be the accounting year. What do you mean by calendar year? Calendar year is January to December, and that is to be considered as the accounting year for this particular sum. Now first let us, as this has a multiple assets, so let's drop down the depreciation so that working would be very easy. Now machine 1 we have purchased in 2020 for 1,60,000 and we paid customs duty of 80,000 and erection charges of 60,000. So when was it purchased? 1st July. So total value is 1,60,000 plus 80, 240 plus 60 is 3 lakh rupees. Now 20% per annum depreciation. So 3 lakhs ka 20% is 60,000, and as the machine was purchased on 1st July 2020, we will charge 50% because 6 months have passed by and we can use the machine only for 6 months. So 6 months depreciation is 30,000 rupees. And for this machine 2021 we will get the full depreciation of rupees 60,000. And for this machine in the third year, that is 2022, when 1/3 of the machine was sold out. So 3 lakh ka machine mein 1/3 is 1 lakh rupees, that is sold out. Balance is 2 lakh rupees and 2 lakh ka 20% is 40,000 rupees. So I have written 40,000 as the third year depreciation to be charged on the machine 1. Machine 2. On 1st January 2021, machine 2 was purchased for a sum of rupees 1 lakh. So in both the years, it will get full depreciation of 20%. That is 20,000 each for 2021 and 2022. Now coming to the third machine that was purchased on 1st of July 2022. So machine 3 50,000 and 50,000 ka 20% is 10,000. As because it is purchased on 1st July 2022, it can be only used for 6 months. So hence we are charging 50% of the depreciation, that is rupees 5,000. Are we clear? Now please go through the machine disposable account. If you have any confusion, drop me a message. I will clarify it. And here we have the machine account for all the 3 years. Please note it down. If you have any confusion, please drop me a message so that you like the video, you dislike it. In both ways, please give your valued comments so that I can improvise my videos and present you with better clarity and better concepts as per your suggestions. Okay. Now, if you have done it, let's move forward. Alternatively, all adjustment regarding disposal of asset can be done in the asset account itself without opening asset disposable accounts separately. In such situations, entries would be as follows: depreciation account to asset account, bank to asset account, asset to PL account for profit, and PL to asset account for loss. Right? Now please note down this sum or take a screenshot and do it yourself so that it would be a practice, and post your answers, post your screenshots so that I could check and revert back. If you like my videos, please give your valued comments, likes, and please subscribe to my channel so that it boosts me and helps me to prepare better videos. Take care. Good night.